Okay, so let's have a look at the depreciation of a fixed asset for 2018 past exam paper for O'Brien Transport. So it says O'Brien Transport prepares its final accounts to the 31st of December every year. It is a policy of depreciating vehicles at a rate of 15% of cost per annum, calculated from the date of purchase to the date of disposal, and to accumulate this depreciation in a provision for depreciation account. So it's telling us it's straight line depreciation. It's given us a list here of vehicles, so 1, 2, 3, when we purchased them. So we purchased them at the start of 2012, it started the third month in 2013, and it started the 10th month in 2014, and it's given us the value for each one. As we read down, it tells in the question that vehicle number 3 in 2016 was crashed and traded again against a new vehicle costing 86. So that's vehicle number 4. That's going to cost us 86,000. It received compensation to 43,000 and a check was paid for 65. So we can identify that cost us 86. So we just paid a check for 65. So we got a trade in for 21,000. So we just take 86,000 away from 65. And then vehicle number 1 was traded in for 13,000 against a new vehicle costing 90,000. That's going to be vehicle number 5. And it's telling us here that it had a refrigerator unit put in on the 1st of 1st, 2013, costing 22,000. So that's going to increase the value of that asset. So the first thing we need to do, we need to identify what years we have to calculate them for, the vehicles and the value of those vehicles. So we're doing workings for 2016 and 2017. So we're going to have a table, and in that table we're going to have headings, so vehicles. Okay, we're going to have the years going across to 2012, 13 and 14. Okay, it tells us to do for 2016 and 2017. So we also need to have depreciation for 2015. Then we have 2016 and 2017 and your total. And this column here is going to help us calculate the depreciation for all the vehicles from 2012, 13, 14, 15, pre-2016. And then going down this column here, we're just going to put in our vehicles and how much they cost. Number 2, number 3, vehicle number 4, vehicle number 5, and don't forget your refrigeration. And then just put in the value for each one so we know how much to calculate depreciation on. So 50,000 for vehicle number 1, 66,000 for vehicle number 2, vehicle number 3 then was 74,000. Then vehicle number 3 was crashed and we bought a new vehicle costing 86,000. And vehicle number 5 then was bought when we traded in vehicle number 1, so that cost 90,000. And then we've got a refrigeration unit then, which cost 22,000. Okay, the next thing we have to do is to find out how long we actually had these vehicles for, so we can calculate depreciation. So vehicle number 1 we bought on the 1st of 1st, 2012, so we had that for 12 months for 2012. We got rid of it on the 1st of 4th, 2016. So in 2016, we had it for 3 months. So we had it for January, February, March. So be careful, it's the 1st to 4th, so we don't count the 4th because it's at the start of that month. So we count the 3 previous months. So we also have it for a full year in 2013, 2014, and 2015. Okay, so we're just going to do that for each one of the vehicles down along. We're going to blank out 2017 because we don't need it. So 2002, vehicle number 2, we bought in 2013. So we're going to start here. We bought it on the 1st to the 3rd. So we only had it for 2 months depreciation, 10 months depreciation for 2013. So we had it for the 3rd month, 4th month, 5th month, 6th month, 7th month, 8th month, 9th month, 10th month, 11th month, and 12th month. So we had it for 10 months. We didn't have it for the start, so just going to blank that out. And then vehicle number 2, we had it for 12 months in 2014, 12 months in 2015, 12 months in 2016, and 12 months in 2017. Vehicle number 3 then we purchased on the 1st of 10th, 2014. So we're going to start in 2014. And we had it for the 10th month, the 11th month, and the 12th month. So we had it for 3 months. So we didn't have it for the first 2 years. So we just blank them out. And then vehicle number 3 was crashed on the 1st of 4th, 2016. So we go to 2016, and we only had it for 3 months in 2016 because it was crashed on the 1st of the 4th. So we only have 3 months in 2016. So we don't have it for 2017, so you can blank it out. And then we have for 12 months in 2015, so make sure we include that. Vehicle number 4 then was the vehicle that we bought after we crashed vehicle number 3, and that happened on the 1st of the 4th. So we got vehicle number 4 on the 1st of the 4th in 2016. So we had it for the 4th month, 5th month, 6th month, 7th month, 8th month, 9th month, 10th month, 11th month, 12 months. So we have it for 9 months. Okay, and we also have it for 12 months in 2016 or 2017. Okay, next one then, vehicle number 5, that's part of vehicle number 1. So this was got on the 31st of the 7th, 2017. So we have it for the 8th month, 9th month, 10th month, 11th month, 12 months. So we only have that for 5 months. So we don't have it for any other years because we didn't buy it until 2017. And then the refrigeration unit was fitted on the 1st of 1st, 2013. So in here, 1st of 1st, 2013. So we're going to have it for 12 months. We don't have it for 2012. And then it was traded in on the 31st of 7th, 2017. So here, we only had it for 2000 and so there's a mistake already. So you see vehicle number 1, if we look here, 2017, so this is wrong. So you need to take this out. So 12 months here, and we had it for 7, so we had it for 7 months. So vehicle number 1 is going to be for 7 months, and the same for the refrigerator, because the refrigerator was part of that vehicle, number 1. So we have 12 months, 12 months, and 12 months. And that's the second thing we need to do. So a couple of things there that we need to be wary of, making sure we are using the correct months with the correct vehicle. So I got mixed up with vehicle number 1 and vehicle number 3. That we calculate if it's at the start of the month, that we don't calculate that month, but if it's at the end of the month, we do. So for example, the 1st of the 4th, we're only going to use 3 months, where the 31st of the 7th, we're actually going to use 7 months. So, and this is what your table is going to look like. In the next video, we'll show you how to actually calculate the depreciation for each one of the years. So that's how you start the question off. You draw yourself out your grid or your table, you find out the years that we need to put in here, depending on the question here, and the 2 years we have, you're asked to do the accounts for. You put in the vehicles down along in this column here and the value to help you calculate the depreciation. And then you figure out how many months you're going to calculate depreciation for each one of the vehicles, for each one of the year, making sure that we take into account when we got rid of it and when we bought it. So vehicle number 1, we bought on the 31st of the 1st. We got rid of it on the 31st of the 7th. So for 12 months at the start, we have for 7 months at the end, and we need to include all the months in between. Vehicle number 2, we bought on the 1st of the 3rd, 2013. So we have it for 10 months. So, and then we didn't get rid of vehicle number 2, so we have it for 12 months depreciation for all the other years. Vehicle number 3 then we purchased on the 1st of the 10th, so we're going to have that for 3 months. And then we got rid of vehicle number 3 on the 1st of the 4th, 2016, so we only have 3 months depreciation to calculate there, and 12 months for 2015. Vehicle number 4 then was bought in 2016, so we have it for the rest of the year, so it's going to be 9 months. and then 12 months then for 2017. And then vehicle number 5 was with vehicle number 1. So we bought it in the 31st of 7th, so we have it for 5 months depreciation. And then remember the refrigeration unit then as well. We have it for 4 years. We didn't get rid of it until 2017 because it was linked to vehicle number 1, and that was crashed on the 31st of 7th, 2017.